Hi guys, welcome back to the channel Subsistence Traveling. I'm your host Jay. Today we're talking about 11 clean energy stocks to buy now. All right, so here's the case for clean energy. Okay, so there are obviously a lot of environmental benefits. We're entering a period of deindustrialization, so clean energy should be in higher demand. Political reasons, especially people on the left would like to see more clean, more green energy, and potential infrastructure spending. If we see major spending go into infrastructure, I bet you that clean energy will definitely benefit from it. All right, so as always, the criteria that's used to select these stocks: one is profitability, two is valuation, liquidity and solvency, dividend. Well, in this industry, not a lot of companies pay a dividend. Okay, so I'm just giving you a heads up. And also, we look at the fundamentals of the sector slash industry. All right, so the first stock is SolarEdge Technologies, ticker symbol SEDG, priced at $94.99. They price to earnings ratio of 27.88, price to book of 5.68, pays a dividend of 0. Okay, so the valuation here is very high. It's trading at over 5 times book value, which is very high. However, this is probably one of the best solar stocks out there. This company, they provide monitoring solutions for solar, and this is probably one of the best solar stocks out there. So the next stock is ENPHASE Energy, ticker symbol ENPH, priced at $38.79, price to earnings of 55.99, price to book of 17.54, and no dividend. Again, the valuation here is very high, over 17 times book value, extremely high valuation. This company provides solutions that increase the productivity and reliability of solar. Okay, so this is another solar company, but again, the high valuation, that shows you that investors are interested in this company. So, something to consider. All right, so the next stock is Johnson Controls, and I'm considering buying this stock myself. Ticker symbol JCI, priced at $28.50, with a price to earnings of 13.38, a price to book of 1.13, pays a dividend of 3.65%. Now, off rip, this is excellent valuation. And yeah, this stock is a buy, good valuation, good yield. This company provide energy efficient solutions for buildings, like your HVAC, your heating, AC, equipment and controls. They also provide building security technology and building automation. So, definitely very diversified. And I think this is a really good stock to buy here. Next stock is ENEL Americas, ticker symbol ENIA, priced at $7.93, with a price to earnings ratio of 6.78, a price to book of 1.22, pays a dividend of 1.98%. Okay, so the valuation is okay. It's a little bit over book value. The dividend is okay. This is a utility company, but they own a lot of clean energy assets. They operate mainly in Latin America. It's a Chilean-based company. Yeah, so this is definitely a good matter of fact, clean energy is very advanced in Latin America. So it's definitely a good company to look at. All right, so the next stock is HANNON Armstrong Sustainable Capital, ticker symbol HASI, priced at $25.10. They price to earnings ratio of 19.05, price to book of 1.62, pays a dividend of 5.42%. Okay, so the valuation is okay. It's trading at more than 1.5 times book. It's a little bit higher than I would like, but nevertheless, decent valuation. Pays a good dividend. This company invests in renewable energy debt and equity investments. Okay, so this is more of a financial company, but they invest solely in renewable energy projects and energy efficient projects as well. Yeah, so this is something to consider. Everything looks good here. All right, so the next stock is LIVENT Corporation, ticker symbol LTHM, priced at $5.84, price to earnings ratio of 14.88, price to book of 1.56, and no dividend. Okay, so this the valuation is okay. It's 1.5 times book. You probably want to wait for the valuation to come down a little bit, but it's a decent stock. Low priced stock. This company makes lithium chemicals. Especially the lithium batteries that are so heavy in electric vehicles and so forth. So this is definitely a stock to consider. All right, so the next stock we're going to look at is ORMAT Technologies, ticker symbol ORA, priced at $60.63, with a price to earnings ratio of 35.43, a price to book of 2.22, pays a dividend of 0.73%. Okay, so as far as the valuation is concerned, the valuation is high. It's high, over more than 2 times book, and it pays a low dividend. However, this is probably one of the better stocks in this space. They focus on renewable energy projects. They do geothermal, recovered energy, energy management, and storage solutions. So this is one of the better stocks in this environment, especially storage solutions. That's one of the biggest challenges in the clean energy space is the storage. How do you store the energy? So this is something to definitely look at. All right, so the next stock is Vestas Wind Systems, ticker symbol VWDRY. Now, this is on the over the counter. Some of you may or may not be able to buy this stock. It's a foreign company, but here in the U.S. it's listed on the over the counter exchange. So if you can buy it, this one thing. If you can't buy it, then it is what it is. All right, so it's priced at $27.56 with a price to earnings ratio of 21.03, a price to book of 4.61, pays a dividend of 1.39%. Again, very high valuation. As the name implies that they focus on wind. It's pretty much a wind energy company. High valuation, just probably wait for a pullback, but it is a good company. All right, so the next stock here is JINKO Solar, ticker symbol JKS, priced at $16.18, price to earnings ratio of 6.61, price to book of 0.5, and no dividend. Okay, well, the valuation is very good. This is a Chinese solar stock. I believe the Chinese will be even quicker than the US as far as applying, clean energy, renewable energy. The evaluation is good. Definitely a stock to look at, look into, do your research on. All right, so the next stock is Atlantica Yield, ticker symbol AY. It's priced at 23.18 with a price to earnings ratio of 37.28, price to book of 1.56, pays a dividend of 7.08%. Okay, the valuation is it's 1.5 times book, which is not bad. I like things at book value or below, but the fact that this is a utility company. Well, actually, they own a lot of different renewable energy assets. A lot of it is in emerging markets, some in North America. Yeah, this is a definitely the valuation is okay for this sector. This is a decent valuation. The only concern is I looked at the debt to assets. The debt to assets is around 60%, which is a little higher than I usually go for. But as far as the business, this is a very good business, and it pays you a decent yield. So I would definitely look into this one. All right, so next is DAQO New Energy, ticker symbol DQ, priced at 48.22. They price to earnings of 24.19, a price to book of 1.13, and no dividend. Valuation is good, just a little bit over book value. The financials looked very well. This company makes polysilicon, which is a vital ingredient for photovoltaic products, like that goes into the solar panels and so forth. So this is the financials look good. It's been over the past year, it's been doing very well. So definitely something you want to look into. But overall the valuations in this space, you just have to be careful with the valuations. All right, so here are some other companies in the clean energy space that didn't make the list, but nevertheless, these are good companies. You want to do your research, and you may find some opportunity here. So the first is AES Corp, ticker symbol AES. They're an electrical utility. They also have desalination technology, and they have several renewable energy projects. Okay. Next is Energizer, ticker symbol ENR. And we all know about the Energizer Bunny. They focus on the battery solutions, and batteries will be very important going forward. All right, so we have Green Plains Partners, ticker symbol GPP. Now, this company focuses on storage and pipelines for ethanol and other plant-based fuels. Next is Panasonic, ticker symbol PCRFY. Another battery solutions company. They had a joint venture with Tesla. I think they make the batteries for a lot of the Tesla vehicles. Next is Waste Management. We all know them as a waste management company. But the business of trash to energy is gonna be even bigger in the future. So I think waste management is something, especially they own their own landfills. They could sell fuel, and also, the recycling, they could sell recycled products and so forth. Next is Royal Dutch Shell, and what many people have to understand, the oil companies are some of the biggest investors in the renewable energy and the clean energy space. And Royal Dutch Shell, they've been making a lot of investments in clean energy. So it's definitely, it's still an oil and gas company, but they do have a lot of clean energy assets. So it's definitely something you want to consider. So next is TPI Composites, ticker symbol TPI. This company designs wind blades and other transportation solutions. Okay. The only reason this company didn't make the list is they're not profitable. They lost 1%. Just not a big deal, but I don't put companies that they're not profitable on the list. But they're definitely something you want, a company you want to do some research on. Maybe you may want to take that risk, you know. All right, so you have Sociedad Química y Minera, SQM. This is a Chilean mining company, and they also produce lithium, which is very important in for electric vehicles. As far as the battery for not only electric vehicles but also our cell phones and a lot of our devices and so forth. All right, so I have Exelon, which is ticker symbol EXC. They're a utility company, and they're one of the more diversified utilities. They distribute electricity, and they have all forms of energy from nuclear to solar and wind. They have all forms of energy. And if you were to see a situation where the EPA was to, raise the energy standards and force utilities to comply, Exelon will benefit from that because they're very diversified and they're distributors of energy. All right, next is Next Era Energy, ticker symbol NEE, another utility. Again, one of the most diversified utilities out there. Very diversified. Like I said, if the EPA, we may enter a period where the EPA raise standards for utilities, and I'm positive that Next Era and Exelon will definitely, be in compliance. All right, so last but not least is a company called Covanta, and they're another waste management company. Very big in the waste to energy business, and again, that business will continue to be a thriving business going forward in the future. All right, so here's some things to consider. The best companies have high valuations in this space. The best solar companies, wind companies have very high valuations. As you can see with companies like SolarEdge and ENPHASE, especially because in the clean energy space, a good amount of the companies are not profitable. So the ones that are, the valuations are very high. This is not a great sector for yield. Usually I don't look at stocks that don't pay dividends, but this sector, usually there's not a lot of companies in this sector that pays. I guess you more consider this a growth sector, not a lot of good dividends. Another thing to consider is this is a very speculative industry. It relies a lot on government direction. If I guess if you're in a place like California, clean energy will do good. But if you're in a place like, say, Alabama or Mississippi, would it may be a different thing. So, it's a very speculative sector, and it relies a lot on government. Okay, so that's something you want to consider. It's really based on whether the government moves in the direction of renewable and clean energy, or do they stay with fossil fuels. And the way it looks like we're going towards the clean energy, but you never know. We're right now we're in a recessionary, depressionary environment, so you don't know. Final thought: the clean energy space should thrive in the current political atmosphere. You're hearing a lot about this Green New Deal, and so yeah, clean energy should thrive. It will benefit from major infrastructure spending. So if we see a big infrastructure bill in the U.S., I'm sure clean energy is going to be involved, especially in your more left-leaning states like your California and Massachusetts and so forth. You'll definitely see that. All right, so there's potential for high growth due to deindustrialization. Okay, so especially in the Western world, we're moving away from an industrialized economy to a more of a circular, solid state economy. And so the need for, if you're not really producing anything, fossil fuels, fossil fuels aren't as essential if you're not really producing anything. So yeah, I think clean energy, renewable energy should continue to thrive mainly due to deindustrialization. All right, so as always, guys, I hope I was able to share some valuable information. I would encourage you guys to like, share, and subscribe. I have some good content, that I plan for you guys. So I just hope, just stay tuned. And as I always say, peace to all. And be sure to check out some of the other videos as well. Okay, peace to all.